my special guest, Bruce Pogachnik.
Hello.
And we had done the episode before where we talked about banks, how banks make money, and some of the things centering around monetary policy, bond rates, things of that nature. We're going to get into today how this crazy monetary policy we're living in can distort values, okay? And what do you do to combat that? I mean, a lot of people are so concerned about what am I going to get as a return on my money? And some people are just going, gosh, what am I going to do for the return of my money? How am I going to not just see it eaten away, you know, by the moths or something? So that's what we're going to talk about here today. Remember to subscribe to the channel. Just click that subscribe button. If you click the bell notification, you will get updates. Also, too, on Rumble, if you're watching this on Rumble, you just sign up and they'll send you out email notifications. And then if you want to like something on Rumble, you hit that little plus button, and then that's called a rumble. So I'm still kind of learning the whole Rumble thing, but anyways, I like the platform. I actually like the app, how it displays. But all that aside, we have a lot of things that seem to have value that's well beyond normal right now, Bruce. I had covered on one of them, I don't know, it was like a couple of weeks ago, I was talking about the stock market, and at that time the PE ratio was right around 35, and the stock market's gone up since then, okay? And now, I just checked, this was on like a CNN finance thing, and it was 39 point something. Let's just call it 40 for round number's sake.
Sure.
Price earnings ratio of 40.
Yeah.
40. Now, just explain to people, what does that mean to have a P ratio of 40? Because that's highly distorted historically. I mean, it's not normally 40.
No, it's that's kind of at all-time highs, and at peaks that you saw before the 29 crash, and by the 2000 crash, there was 40 times multiples on some of the tech stocks, and then in 08 again, they were high, and so they've climbed to these what are historically astronomical multiples. The question is, how long will they stay? Will they go higher? And that's a little nuanced because every situation is a little different, but it really ties to interest rates. Yeah,
it's very nuanced. It's like, okay, real quick. I tried doing like the shorting play on the market, and look, the market can stay irrational longer than you can remain solvent if it wants to be irrational, okay? I mean, I wasn't like I took big heavy losses because I didn't have a lot in there, but nonetheless, I thought for sure this can't go on.
No.
But it did.
Yes, and it can. And so there's levels of irrational, and what happens if it becomes less irrational, goes back to normal, and so you were shorting hoping for a quick retreat to normal.
Exactly.
Or you could have it kind of flatline and earnings catch up. So your question of a multiple of earnings. So if a company makes $1 a year per share, 40 times earnings means that stock is going to sell for $40. And so
that's 100% of the earnings.
100% of the earnings on that share. So this one share of stock, your one share of ownership in the company, and it earns $1. And you're paying $40 to buy this future income stream, which is what the earnings in the dividends. If they make $1, they don't pay it all out. They pay part of it out in dividends.
I didn't mention this too. That's of the S&P 500, folks. I forgot to caveat there. I'm not talking like some flyer stock, right, that you're hoping is like, oh yeah, it's going to go way up, and I'm getting
it's going to come up with a vaccine, and so it's selling at 300 times times no revenue. So it's an infinite multiple of no revenue.
Yes. So, I mean, we're talking about, not the flyer type companies. We're talking about the S&P 500, the 40. Yeah, that's just real high.
So another way to look at it is if that company paid out 100% of the earnings on that share, the dollar, it paid it out to you every year, it would take 40 years just for you to get your money back. So, and if you looked at it like a normal bond, you would say the yield on that is 2.5%. I get $1 divided by the $40 share price is 2.5%. Now, if it paid out 100% earnings, you say, hey, 2.5% is a lot more than I'm getting at the bank. I'm getting a lot less than that. Then that's one of the reasons why stocks remain this high. Because the interest rates are so low, people are saying, where can I put the money? And so stocks, even at high multiples, again, if you divide it out and say, well, that was a 2%, 2.5% return, that's better than I'm getting in a bank fund or something like that. The problem, is the deposit at a bank is guaranteed up to the FDIC limits, 250,000. That stock price isn't guaranteed, and it could go down soon, could go down fast, could go normal. So when you're paying high multiples, what you're hoping is the economy's going strong enough that next year this company's going to earn $1.05 on that share, and 10 years from now it's going to be making $1.50, and 40 years from now it's going to be making, let's say, $4 a share. And you say, wow, I bought it at $40, it's making $4 a share. But again, that's the multiple. When you go back to the 80s and interest rates were 10%, then a company making $4 a share, the stock sold for $40. So if interest rates go back up, they're kind of a lever that's going to put a lot of pressure on stock markets and valuations. And so this last week, when the 10-year Treasury pushed up to 1.5%, you saw the market give up 1,000 points because they're kind of a lever. You pull one lever, something else moves.
So this was what always confused me so much, because it's almost like opposite world. When the economy does good, which then causes interest rates to rise, the stock market falls. When the economy does bad, interest rates go down. It makes no sense. This is what I'm saying. It makes no sense to me. No sense, because you would think if things are going well, things would go up, and things are going bad, things would go down.
Because if you want that company's earnings to grow from $1 a share to $4 a share, it has to be a good economy.
Yeah.
So it should go, stocks should go up in a good economy. Recently, they've been tied more to interest rates that have fallen and fallen. Really since 2008, they've continued to fall, and actually as far back as the mid 80s, they've fall. But to just extremely.
But then they were really high in the mid 80s too, so that was kind of artificially high. For those who don't know the history on that, what did they reach? 18%, I think.
Yeah. 18%
interest rates on a home loan.
Yeah. And so people weren't buying homes. The economy obviously grinds to a halt.
Yeah.
And just the opposite's happening now, of course, is interest rates are low. Buildings kind of just exploded in this last year. People at home, they're at home, can't go out, and so they've put their money into remodels, and material prices have just kind of shot through.
Oh my gosh, plywood's $30? I mean, 2x4s are $6. I mean, we're talking like tripling of prices. Which, kind of brings us up to, when we get into stores of value. So like lumber is a commodity, it's a hard asset, okay? But most people aren't going to store lumber, obviously, because it takes up a lot of room, and it's still, even at $6, it's a lot of space for that $6. So, where we can look at things like silver, which is a store of value, okay? And this would be like, this is a 2002 silver American Eagle. And those carry a little bit of a premium.
There's about 1 ounce of silver in there. And an ounce of silver today is in the $26, $27 range. And then normally you'd pay a premium for the minting and the packaging of it that a lot of times runs a couple dollars. This is a little fancier packaging, maybe a little more. And so again, there's disconnect. So normally a couple dollars over the spot price of the silver, the value of the silver in there is where it's sold. Now silver got up to $30, it's retreated a little bit. Gold got to $2,000, it's retreated into the 1700s. But the interesting thing, those are market prices that, are more reference for us and are controlled by governments and big players buying billions of dollars of gold. And so the interesting thing is those prices have fallen, and at the same time, these smaller amounts of physical gold that you take possession of, that price has not fallen.
No.
So now the premium on these 1 ounce silvers has went as high as about $8. It's $6 to $8 depending where you're finding them right now.
So on like percentage wise, we're talking like a quarter of the value is
a premium because people are buying the physical silver and gold. That's the reality on the street, and yet the market or government control price is saying, well, no, it's not getting out of hand. We're not losing control of the dollar or the financial system. People don't buy silver. It's a bad deal. And they're trying to keep the price down. And yet you're finding that in the marketplace that things that maybe are seen as store of values and scarcity shows up, like ammunition, silver.
Ammunition,
it's selling above historical prices and premiums.
Yeah, like, I mean, for example, I mean, you right now, you go out and try and buy ammo for your rifle, and let's say you're in a NATO round, which is like a, for those who aren't familiar, like a 5.56, which equates to a 223 as a caliber, but 5.56 in metric, or a 308, which is a 7.62. Those rounds, I mean, first off, they're just almost impossible to find. Then when you find them, they're literally selling where you would have paid for a 5.56 ammo, maybe 33 cents a round, and now you're paying over $1 a round. So you've literally seen a tripling in that. And silver to that, you know, was $13, I think, last spring.
Year and a half ago.
Yeah, year and a half ago was at $13. Now we're up to like 27. And the buying physical silver, it seems like it's just completely detached from the spot price right now, because you're just trying to find it. It's kind of like ammo. There's like a shortage of physical on the street. It seems. Again, I don't know where all this stuff is stored or everything, but like when you go to buy it, I mean,
it's not there.
It's not there. I mean,
you got to scrounge for it. I shouldn't say it's not there. It's difficult to find, and there are premiums tied to it. And there's normal ways. That was the 1 ounce. We had the 1 ounce silver, and then you have just historical coins. And this happens to be a roll of 1960 quarters, and there's 40 of them in here. So that would be $10, which is the normal cost of a roll. And their silver content is for every dollar in quarters, dimes, half dollars, there's like 0.71, 0.72 of an ounce. So if we used $30 spot price of silver, then $1 of dimes, $1 of quarters, $1 half dollars would have about $22 worth of silver in them. Silver dollars, I think you have a silver dollar or two.
I got some. This is a Morgan.
They were minted up to 1934. Liberty. I think they have like 0.77 of an ounce, a little more in there. And so,
that's what they call junk silver, right? Like
scrap silver, bulk, scrap.
And that's what I've tended to buy, is because it really doesn't carry any premiums on it.
Not a lot of premiums to the regular silver, and it's just kind of neat.
It does right now, though, because again, you can't find it. So right now you get to pay some premiums on it, but on a whole, it doesn't carry a big premium, not like an American Silver Eagle.
No. So again, at 0.77 or there's about a $30 silver. You got about $24, $25 worth of silver in one of these, and right now they're $30.
Yeah.
And so $5 premium, and they've held up. They are kind of nice to have because they were, U.S. coins that your grandparents or great-grandparents actually carried around in their pockets. So,
which is cool.
Some people find them a lot more attractive. My father only buys the actual coins. He doesn't like just bulk silver.
Yeah. And this would be more of like a bulk silver. This like an American Silver Eagle is actually is guaranteed to be worth that $1, right? Is what they are. Or
I believe those were printed at dollars, and then every country and a lot of mints or silver mines that actually mint stuff, they do their own 1 ounce coins. They don't have any, This is always worth $1. It's hopefully worth a lot more if you paid $25 for it. It's always worth $1. These are just worth the price of silver. They're minted like coins, but they aren't actual currency or numismatic coins that you could spend.
Yeah, so now that's a way to, now it stores value, and so I'm like, let's go through a zombie apocalypse type scenario here, right? End of the world, kind of the currency crashes, the dollar is, it's like the old days of the German mark, right? And they're burning it in their fireplaces because it's worth more as fuel than it is on the street. Can't buy bread with it. You can't buy anything real with it because it just sucks and no one wants it.
And everyone uses that German, the Weimar Republic, and kind of between the Depression and kind of started World War II was their currency collapse. But there's been a lot of currency collapses since then. Zimbabwe is one where inflation hits thousands of % a day, and there's Argentina's had numerous bouts, and a certain amount of South American countries and other ones where they just at some point issue a new currency and do away with the old and try to get control of it. But it happens. It happens over time. We in America think it'll never happen because we've been stable since our founding, and we're kind of surrounded by water and a friendly neighbor to the north, and maybe even friendly to the south, but we've been isolated, and so we've avoided a lot of the issues that have happened to European countries and countries around the world.
For sure. But to that point, to think that it could never happen is a little bit naive, really.
I think so.
So then at that point, you're in this scenario. What's actually going to be worth money? Okay, if you're going to a point where the dollar crashes and all that's taking place, what's really worth money? Well, it's hard assets and assets that can produce. So like land is worth something because land can produce, whether it's producing timber, like we do up here in northern Minnesota. If it's Iowa cropland that's producing food, food's always important,
yeah.
So, that's those commodities, oil, things of that nature that will actually heat or power you down the road. Commodities are then the stores of value,
and so commodities have started to move because the question is all this government spending going to create inflation? And that's the worry. And we've seen some inflation. We've seen price inflation in lumber, and that's somewhat maybe demand driven. Everyone's out shopping. Yeah. We've seen it when it starts to happen in silver. Then it's concerned maybe about the currency. And so the question is with the government. Printing money, first, they're creating these deficits. They're spending more than they're taking in, and generally...
Like a lot more.
A lot more. And generally, that's not been good for an economy or the currency itself.
Yeah.
And so the concern is that the value of the dollar will fall. And people will say the dollar, the value is going to fall. But the question is, against who? I mean... it's not like a ball. It doesn't just fall. It has to fall relative to something else. And that's the store of value question. So if the Europeans that have negative interest rates and social democratic governments and are spending just as fast beyond their means as we are, is our dollar going to fall against their currency? Probably not, because they're doing the same thing we are. The Japanese, because they're aging, are doing the same thing we are. Mm-hmm. So it may not fall against some of the other currencies, the English pound or the euro. It may fall against maybe the Chinese currency, but it will fall against things that are deemed as real historical stores of value, which is what we're talking about. Gold, silver, where there's limited supplies. Now you're seeing cryptocurrencies that are seen as a store of value, separate of the US dollar, but it never falls in a vacuum. And so it falls, and so there's winners and losers, and trying to decide where you're going to put your money is not easy.
Well, then you've got, the Chinese currency, and we actually owe the Chinese quite a bit of money, don't we?
Several $1 trillion,
several $1 trillion. I mean, great people to be in debt to there.
It's kind of interesting because people talk about a possible war with China, and then you realize that because have a current account deficit with China, we're buying more goods from them than they buy from us. So they get our dollars, and they don't want our dollars. They have their own currency. So then they buy our bonds, our government guarantees, and hold the bonds. And they have several $1 trillion worth. I think they were as high, close to maybe $3 trillion. So this idea that we would go to war with China, we'd have to borrow the money from them to buy some of the components for war from them, to then go fight them. It really wouldn't work that well.
So that's I guess that's one of the, going back to, now we've got the Biden administration. If you go back to the prior 4 years with Trump, and the one thing I always was like, well, whatever, trade deficits or, China, and, they make this stuff, we buy this stuff, we're technology service sales, what's it matter? And to Trump's credit, he kind of woke me up to the fact that it does matter. And
it does matter. When you borrow money, it's an IOU. And I mean, you can get someone with a lot of degrees and say it doesn't matter. But in our part of the world, you ask any person, if you have an IOU out there or a couple $1 trillion worth of IOUs out there.
It's tough to fathom, but
it matters. Everyone knows that comes due.
Yeah.
And that there's a price to pay or repay for that. So anywhere people with all their degrees say, oh no, we're really smart and it doesn't matter. Somewhere people say, not in our world. If you have an IOU out there, it comes due.
Well, and you had borrowed me a book once, Bruce, and it was, I think, The 5 Stages of Collapse, it was called. And it was from a guy in an Eastern European nation that had gone through economic collapse, and he talked about the things that were worth money. Now, we're currently in this time now, so you can take gold and silver and you can trade that, okay? And it can be seen as like a store value, like a dollar bill. But then there's barter, or just doing things for other people and them doing things for you, like helping them build their garage. They help you build your garage because you can get it done quicker if you work in tandem. So that's one thing that really happens in those localized economies. And if this does happen with the dollar falling, it is going to move back to these localized economies. And all of a sudden, I think all these people who think it didn't matter are really going to be wondering what the heck to do.
I think and they don't have really the skills. I think you saw it a little bit in some of the
Zero skills. They can't fix a car. I mean, really. I mean,
or they don't know where milk comes from, but
or where meat comes from.
So I think you saw that with COVID and the scares in some of these cities. And so all of a sudden you saw that the closer people live together, the higher the infection rates. And big cities start, like New York, people just moved out.
Yeah.
And so if time gets tough, then you have the little social unrest. We had some of the social unrest, and people just moved out. And so they thinking, we'll go back to the country, we'll go into the rural areas where we can plant a garden, we can raise some of our own food. And you talked about timber, and in the old days they put a roof over their head with their timber, and they got their food off the land, and they kept it fairly simple. So there is value in that, and our rural people have skills, survival skills like that, to help their neighbors and to get through. So that is
a medium of exchange.
It's a medium of exchange, and it's also a base and stability under you if you have some skills and a little plot of land. So.
Yeah. Absolutely. And then, but there's other things that store value. We talked about ammo. We talked about silver, gold. This is
an interesting, and the question is the size of stuff. Like you said, plywood would have been a great store of value, but where do you keep $10,000 worth of it? And then you're parking outside, and in all of them.
Or like oil, when oil was negative, you had to have a place to put it.
Yeah. So that doesn't help you.
Sidecars,
And so the question is what a store value. And one of the important things is you don't want to, and this is the price of stocks, you don't want to buy at a point, at an inflated point, that if things don't go as you envision, better or worse, that you end up losing money. So you want a store that's maybe got.
Yeah, you're bringing up a great point here, Bruce. Just remember this, folks. All the money is made in the purchase, in a sense. So, my uncle had taught me that. He was a real estate investor, and then I did a real estate investment. We did a development. But all the money's made in the purchase. I mean, if you buy it wrong, you're not getting out of it right. I mean, that's just not how this deal works. So if you're going to overpay, you're just going to be... it's not going to work out well.
So that was a stock. So we had the $40 share stock, made $1. 10 years from now, it goes well for the company. It's making $1.50 a share. But now the multiple's only 20 because interest rates have gone up.
Yeah.
Now you get 20 times $1.50 is $30 a share.
You've lost $10.
You've lost $10, and yet the company has increased their earnings by 50%. So the problem was your entry point, your buy point, turned out to be the bad thing. The company did well.
Yep.
Because 10 years from now, the company might be gone, and you paid $40 a share for. So you bought a good company, it grew, and your entry point produced a loss or just a break even on your money.
Yeah, but people who are buying ammo at 30 cents, and now their neighbor needs it, and they're selling it for $1.10 a round, they're coming out pretty good, and that's actually kind of smaller. It's not like a piece of wood or something. So, that's a good place to store value. And another place would be, guns. And when I read that book, that was, like the number one thing.
Yeah, that was over in when Yugoslavia fell apart in 1991. Some of us remember 1991. It wasn't all that long ago, and Yugoslavia disintegrated, and some of the local states and ethnics, they started warring against each other. In some communities, it was kind of guerrilla warfare and lockdown for a year, and ugly situation, but happened in the 90s. You see it in Syria today,
yeah,
where refugees and their towns have been blowing up and they're afoot. And so there's scary situations. We hope it never happens here. And we've got a lot of reasons why it won't in the United States, but never say never.
Never say never. No. So, you could pick something like this is just a, standard bolt action rifle, but.
So when Neil started talking about this, ammo and guns have gotten more expensive. So I thought, well, I'll search to see what we can find. And searching online, and what I found one day, this is a Sauer 6.5 Creedmoor, a rifle, German made. And they sell for about $699. And I was searching one day and I found this a few times. This model was a couple years old, new in the box. So the new models come, they thread the ends, they change them a little bit, they're selling for $699. This firm happened to have 73 of the old models. They were closing them out, selling them for $499. At $499, I'm going to leave it in the stock, leave it in the box in the basement. It'll never be worth less than $499.
Exactly. So at least you're not going to lose money on it. So like one of the things, like even when you're like, I remember I was buying a piece of land, and it was I had to do a survey on it to prove the value and everything, which basically more than doubled the value of the piece of land. But the thing is, I knew even if that survey didn't come out the way I wanted and it didn't include that little piece of lakeshore, I mean, I could sell it for the price I was buying it for. So, one of the things when you're looking at that, what do you buy? I mean, you look at this, it's $499, well, I'm not going to lose money on it.
Yep.
So,
and am I going to go out and buy a dozen of them? Probably not. But if I have a couple of them around and, 10 years from now, everything goes well, I gift them to a grandchild or a niece or nephew, and they have a gun. That's, at that point, I'll be selling for $1,000, and I'll have mine for $500.
Because just inflation will take care of that. And so one of the things that you're doing is you're looking at, well, how do I just stop the erosion of my money through inflation? And, this is, just different ways to do that, okay? So at least like with gold and silver, at least it's going to go up with inflation, and silver has industrial uses. So does gold, obviously. And so as industrial uses, or people just like it for jewelry and things that are beautiful. And actually what was interesting too, when I read that book, that, art did maintain value through those times. People still wanted beautiful things. And
this has been timeless. There was a story about way back in the Roman days, and this family had held wealth, and they just asked them how, and land, a third in land, a third in gold, and a third in artwork or things they could carry with them, mobile, because war went through and you had to leave the land behind, but you could take your silver and other things along with you. So.
Yeah. So I hope you enjoyed this edition of Lumberjack Logic. I mean, when you're looking at your own situation and how do I preserve some of this wealth, because if you're just owning dollars and then that dollar, gets eroded through inflation and inflationary pressure becomes so great that it's worth 50 cents on the dollar, that's not good for you. And on the flip side, if inflation occurs, these things are all going to go up because the cost of manufacturing and the cost of the raw materials is going to rise with inflation.
Yeah, and so there's two parts of inflation, the cost of materials and making it, and the other little play I did here is if the dollar falls against the euro, because this is a German-made gun.
Yeah.
I also looked at Italian-made. So if our dollar falls against theirs, they're going to need not $4.99 today, they're going to need $5.50 to sell it to get the same amount of dollars to convert to their currency. So there's a little currency against currency play in addition to just inflation.
Cool. Well, thanks so much, folks. And remember to hit that subscribe button and keep listening for the next episode of Lumberjack Logic. Thanks so much.